Hello, this is Jim Smith at Catapult Research. Today we're looking at the S&P with the parabolic lines. If you start from this low back in 94, you can see it offered great support all the way up. Once you broke it, you went sideways. You even tried to rally to new highs, but you didn't quite make it because this line stopped it. And about 5 months after the break, you went down. And then from this low in 2002, you rallied. Once you broke it, you tried to come back. You tried to get back to the line, but you couldn't do it. You went down. Now, if we look at the most recent example from March of 2009, you can see we've had this huge, long expansion, longest economic expansion on record, longest stock market rally. Guess what? You broke it a year ago, back in October 2018. You had the initial thrust down, and as we did in the past, we come back to the scene of the crime, just like a murderer tries to come back to the scene of the crime to check his handiwork before he leaves for good. Same thing here. Came back, down. Came back, down. Came back. Now, you can argue, oh, well, what's to stop it from going to new highs all the way to 3,100? It could do that. I'm not saying it can't. I'm just saying once you see it start to move down in a big way, get out of harm's way, because, you know, if you see rising volume on a big sell-off, you know you're probably starting a move down that ultimately could take you to this green line here all the way down at about 1600 area. So I'm not saying that's going to happen today. I do a lot of Gann work, which provides timing, tells you more realistically when to expect this pullback or major correction to begin. But for the purposes of this chart, I just want to tell you that you're living on borrowed time, because remember, after this initial thrust down, you had 5 months before you really sold off in a big way, or 6 months. And here you had about 5 months. Now, what have we got here? Since the break in October 2018, it's 10 months, 11 months, going on 12 months. I mean, at some point, this thing is going to fall apart. And I don't think you want to be there when it does. That's your choice. But the reality is, in prior examples, 6 months, 5 months, then you got the initial thrust. So I'm saying if it's going to take 12 months before it goes down, or 10 months or 11 months, that may be telling you something about the size of the correction that's about to hit us. So be forewarned that this chart suggests that if you're investing in the stock market now, you're taking a lot more risk. So be ready, and if you see the market start to sell off in a big way, don't be slow to take action. In fact, quite frankly, I think you need to, if you see rallies, I think you need to sell on the rallies. I think you need to basically exit positions that you were going to sell anyway. Maybe there's some stocks you own that you don't feel comfortable with. I think you should take advantage of any rally to get out of harm's way, because when this thing really starts to go, it's going to get really ugly, and I don't think you want to be there for that.